Thank you for being here with us today. Just out from the floor, I have the impressions that most of you actually have a significant exposure in the US AI and technology sector. Am I correct to say that? Is that so? Okay. So in the next 30 minutes or so, I'm going to share with you a little bit of this same story, but I think you may want to look at China as a diversifier to your existing portfolio. I'm going to talk about China capturing the next wave of growth. Now, if you look at the last 30 years, right, when we first started having exposure in China, the investment team back then was basically concentrate on consumption, domestic consumption, demand for financial loan, property, and those are the theme that dominated 30 years ago. Now, with the arrival of the AI today, things have changed significantly, and we strongly believe that China is in a very good position to capture the wave. Yeah, so let's start. Now, why now? If you look at this, a lot of this money that's coming in, right, actually flowing to China, and not only that, they're also going into the AI. Now, the AI actually has moved from the hyper cycle to the profit cycle at the moment. They have passed the stage of the experimentation, and more importantly, I think it is going to be a real-world deployment in terms of increased productivity, and earning has to play a part. Yeah, so looking at some of this company, we strongly believe that some of these new player has a potential to actually go very big. And number two, the investment team we have for our dynasty portfolio is on the energy. Now, energy is a new power. Everybody talks about the data center, right? To get your data center works and running, what do you need? You need power and electricity, right? And if you look around globally, which nation has the strongest in terms of their energy transitions? Malaysia? We are also on that path, right? What about United States? Are they looking good? I don't know. Somebody says that they don't believe in the climate change anymore, right? So only China has done extremely well in terms of renewable energy, and they are moving toward the ESS, as the previous speaker talks about. And more importantly, we think China is going to play a key role in actually supporting the data center. Last but not least, we strongly believe that this is a China healthcare. It's a long-term structural growth in China. Now, previously, we heard a lot about the Make in China doing the generic drugs and things like that. But since the pandemic, things have changed significantly. Not only China has been able to sort of like fill in the gap for the pipeline development for the Western counterpart, they are also start to have new drugs and innovation in the healthcare sector. And with the aging population, we strongly believe this is actually a very strong-term structural growth in China. Okay, let's touch on the AI from the hyper cycle to the profit. And if you look at this AI ecosystem, essentially there are a lot of different sectors being involved, right? You have this chip manufacturing, the AI chip design, the processing data, the packaging, the assembly of the thing. Now, Malaysia is really good at the assembly and the packaging of these chips, right? And you have the data center running the AI, energy powering the AI, as well as the data that, there's a lot of the demand for it. Now, if you look at the other sector, for example, in terms of the software, and these are also growing very well. There are a lot of company in China actually has done significantly well after the IPO. And if you look at this chart here, right, our dynasty fund focused quite a fair bit on those boxes that is highlighted in red. Now, the reason, even though software is doing very well, but we are not actively participating, is because some of the stock are not Sharia compliance. As you know, the dynasty fund is actually 100% Sharia compliance. Now, I'm going to take a pause here and ask the questions. How many of you is actually investing in our dynasty fund? Wow, there's quite a number of you. Are you guys happy with the performance the last couple of months? Any? Yes, why do you say that? What happened to the performance the last 6 to 12 months? As a matter of fact, the fund actually invested in the right team, and as a result of that, we continue to outperform the benchmark by a fair bit in the last 6 months to 12 months. Okay, let's continue. I know this is very wordy, there's a lot of wording here, right? But what I want you to really focus is that this is the company in United States versus the company in Taiwan and China. Now, what you see here is that in this AI, right, there are many, many different things, right? You have a PCP, which is printed circuit board. You have CPU, and we are quite familiar with GPU right now, thanks to NVIDIA. We have the high broadband memory, and also we have memory chips, right? If you look at this chart here, right, and looking at the color, it's not difficult to find that US and some of the Western countries are really, really good in this department. CPU, GPU, the high broadband frequency, as well as the memory. And they are really dominating those sectors. And if you look at the rest of the supply chain, right, China and Taiwan are actually equally important in this whole AI supply chain. And there are many, many companies, in Taiwan and in China that we can invest in. So that makes our, stock selection very exciting at this juncture. Well, the chart on the right side, you're probably quite familiar, right? These are the Max 7, right? And what I really want you to focus is those within the circle. And these are the company actually in Taiwan or China that actually be part of the building block for the global giant tech. And that's why it's so important. Besides investing in the US, right, you should also diversify some of your portfolio construction into Asia, looking into China, looking into Taiwan. Yeah. Now, I'm not going to go into nitty-gritty, it's just to highlight to you how they actually support this tech giant in this so-called the AI supply chain. Now, what I really want to highlight to you is that, people actually ask the question, is it a bubble? Are we at the end of the capital expenditure for the AI? If you look at this chart here, right, it tells you that no, we are not at that at the moment. Now, I would like to point you back to this particular point here. For 2026, right, beginning of the year, and we're only looking at, 1 trillion, projected in terms of the capital investment into this industry. But in the last 3 to 4 months or so, right, that 1 trillion has increased to about 1.5. And if you look at the 2027, you think that thing have slowed down, right? Thing hasn't. As a matter of fact, in terms of their projection, it has also increased quite substantially from initial 1.1 trillion to about 1.9. So what you're seeing here is that if you think that this is the end of the cycle, our stand is that, well, we are probably getting close to it, but we are not at the peak of the capital expenditure just yet. Okay, why is it important? And Taiwan, of course, as you know it, right? Taiwan basically is a heavy global reliance, and there's no secret about it. And why is it important to show this chart? Number one, if you look at the chart on the left side, right, it actually shows the European reliance on the Russian energy. It's only 20%. And what happened during the war, when the war broke up, you can see how the European nations suffer in terms of the GDP growth. Now, if you look at that and you applied it to the China in terms, or even Taiwan in terms of semiconductor, the global semiconductor depends on Taiwan quite a fair bit. Yeah, it's close to about 60%. Yeah, and if you're looking about the advanced chip, even more, it's close to 90%. So the global AI development, right, actually hinges on the development or even the situation here in Taiwan. Yeah, that's why you can see the chart on the right side. Taiwan is very, very important to the US AI in terms of their imports. Now, I talk about Taiwan. I want to come back to China. Now, this chart is very interesting. You look at it, right? Of course, initially, in terms of the electronic integrated circuit export to the US, right? It was growing quite steadily until last year, 2025, and beginning of this year. You can see the sort of the magnitude of the growth is amazing. It was actually increased quite a fair bit, yeah? So that's why China, in terms of the investment opportunity, has increased tremendously for a portfolio manager. Now, coming back to China, somebody just asked the questions, whether the AI in industry in China is still relevant. But if you look at it, right, they continue to grow. By the way, it's just that so far at this stage, right, they have not been growing as fast as the United States. If you look at the chart here in terms of the volume or numbers, right, for 2026, it's estimated about 700 billion. That's not even half of what United States is doing. But that make us even more excited. You know why? Because one, if they play a catch up, if China decided to actually catch up with the United States, what will happen? There will be significant growth in the AI industry in China. Okay, I think I don't need any introduction to this particular company based in Taiwan. I mean, if you buy any of the US tech global company, right, definitely you will see this TSMC. They should be in the top 10. If they are not, we think that the portfolio is going to underperform significantly. Now, the reason we like it is because you look at their profile of the revenue, about 50% of their revenue actually coming from AI. And also, we are talking about 50%, which is non-AI related, which make this company very, very exciting to own for the long term. And for those who actually invested in our dynasty for the last couple of years, I think, during the war and all the way to 2023, I would say there has been a significant or substantial drop into NAV, but we have been able to catch up recently in the last 1 to 2 years. Yeah. Now, I'm going to move on to energy. I talked about the AI. I want to talk about the energy, and China is actually a big player in that. Now, I know this, this chart here is a bit crowded, but I just want to point your attention to, the bottom part where it talks about renewable energy, for example, like the solar, the wind, the hydro, and things like that. And look at the battery storage, yeah. And this has become the buzzword at the moment. I mean, for those who drive an EV, you probably know how important the battery is, right? Yeah, exactly. Then what about the grid and power management? Can you think of another country on this place of the planet who do a better job than China? We can't think of any. Yeah, so that's why China is so important in these energy transitions. And they're going to play a very important part. Now, the reason why the United States, right, have this low energy transition, because if you look at the economy, essentially are driven by the domestic consumption and services. So when you do have a lot of these services, you do need a lot of energy, right? And China in the last 30 years, what happened to them? They have been really like a factory, the manufacturer of the world, right? They need a lot of energy. And they've been able to plan in the last 30 years until where they are today in terms of the energy transition. Very, very, very significant milestone for them. We look at the comparison today, right? We don't think US is in any way close to what China has done the last 30 years. Okay, look at the data center. Look at some of this number here in terms of the utilization of the power demand from 2024 to all the way to 2030. And you're going to see a significant growth. Now, who will win on this competition? Yeah, we strongly believe China will be the one to actually come ahead. You look at some of this number in terms of their ESS, in terms of shipment, and China has done extremely well. If you look at the company, for example, Catel, and some, if you don't know how to pronounce it, you just call it CATL. Yeah, and BYD, for example, these two companies actually command more than 55% of the global market share. So without these two companies, you can, this so-called the ESS power is going to have a lot of impact on the industry. Well, the previous speaker talks about it. We also hold this, and this particular company has been in our top 10 for many, many years, right? And recently, they have done extremely well in the last 12 months or so. Yeah. And the reason we like it is simply because, as the previous speaker talks about, going forward, the backup is important. When you run a business, you can't have all this, disruption. and battery storage has been a very good backup. And China continue to actually be able to have an advantage on that. So we continue to like these stocks. And last but not least, we do think that this sector is underrated at the moment, but things have changed significantly after the pandemic. Yeah. And if you look at what I'm going to share you later on, you will be amazed. Yeah. Now, if you look at China today, right, definitely you have this pharmaceutical as well as the medical devices. If you look at in terms of their growth rate, we would think that is decent. We don't think they are high growth as the technology stock. But more importantly here is that if you look at some of the driver, you know, the market key growth driver is actually coming from number one, there are a lot of penetration in China's AI across all the different industry. Yeah. And more importantly, I think the government support of all this initiative will continue to make China a very attractive market in terms of the pharmaceutical sector. Now, this sector has been a little bit underperformed, but we still like this sector simply because of the long-term structural growth in nature. Yeah, we like them not because they are not compared to the high tech, they are definitely in terms of growth rate is not significant, but we do think they have a lot of potential. For example, right now, there's a lot of US in licensing. What they do is that because there are a lot of gaps between the development of the pipeline. So this is where China actually fill in the gap. And more importantly, in terms of the China out licensing, China has been quite innovative due to the talents, coming back from the United States. They have the capital market to have access to this industry. And at the same time, the regulatory actually has reformed and make this particular sector even more exciting. And you can see a lot of new drug, new innovation coming from the pharmaceutical company, and they're willing to work with the global player, yeah, to roll out their products. So this is very exciting for us, even though at this juncture, right, they are not as hot as the AI sector, but we do think that this is going to be one of the mechanisms for us to play the defensive in the portfolio positioning. Okay, if you look at the chart on the right side, or my left side, the US in licensing. Now, prior to the pandemic, I mean, in terms of the market share for China, it's really, really small, fluctuating anywhere between 5%. But after the pandemic, you can see significant growth in that sector. Yeah, China has already moving from about 5% to about 24% in just a short 5 years period. And it's actually taking the market share away from the Europe. Yeah. And also in terms of out licensing from China, just about 6 or 7 years ago, right, the market share is really almost just 1%. And fast forward to today, you can see how fast they actually penetrate in terms of the market share they have today. So this is a sector that we do think that if you hold it for long term, it's going to have some pretty good impact on the performance. Now, one of the stock we quite like is actually Wuxi Apex. Now, the reason we quite like it is because they have moved away from doing a generic drug and moving the supply chain and become more innovative and in terms of the biotechnology sector and on the high-end devices. So we really like these stocks. Okay, I just want to quickly update you a bit of what we have done on the Dynasty Equity Fund. This is a fund we launched it to provide Islamic solution to our investor. And in terms of the geographical coverage, it actually can invest not only China, Hong Kong, or Taiwan. They can also invest in Chinese company that listed in China, in Malaysia, Singapore, or United States. Yeah. So this is the investable universe for the fund. Now, in terms of the key feature or position for the fund today, we are basically in line with the structural mega trend that we are experiencing today, which is the AI, which is also on the energy as well as the pharmaceutical from China. So what we are trying to do here is to take advantage of the situation to deliver the outperformance for the fund. This is the snapshot of the asset allocation. As you can see, the technology basically is one of the highest weight in the portfolio. And this is due to the classification of the index provider. But if you really look in the portfolio, right, we have close to more than about 60% is actually in technology or AI supply chain related company. Okay, the top five, I mean, it's not surprising. You can see TSMC, Alibaba, we continue to like it. Delta Electronics from Taiwan, MediaTek, as well as Captel. These are the top five. I mean, on and off on a month-on-month basis, you will see a little bit of fluctuation, but essentially, these are the top five we have for most of the 2026. And for 2026, you look at the month-on-month performance, right? Out of the 6 months, only 1 month the fund deliver a negative return, which is month of March. And you know what happened, right? Because on the 28th of February, somebody decided to declare a war with another country. And for that month, I think globally, everybody suffer. But for this fund, we actually didn't do that bad. Actually, even the market dropped quite substantially, about double digits on decline. And the fund only dropped about 4.5%. And subsequently, in the month of April and May, it bounced back very strongly. For the month of April, it bounced back close to 35%. And subsequently, for the month of May, it continued to deliver very strong double-digit return. Yeah. This is a fund performance. Just quickly go through some of the number. The last 6 months, this is as of May, by the way, May. So it's not exactly year to date. It's not exactly year to date as of end of June. But even then, you look at the last 6 month performance has been really, really strong. We have been able to outperform the benchmark by a significant number. And if you just look at the last 12-month number, it is even more glaring. We deliver about 66% versus the benchmark of 33. So the last, what I would like to say that in the last 12 months or even beyond that, like in the 1 to 2 years period, right? The fund manager, in terms of the conviction, in terms of the stock conviction and the sector or the investment team that we have, continue to deliver positive return for our fund. Yeah. Okay, so what are we going to do for the next 6 months for the remaining of second half of this year? And we'll continue to focus on the company that we worked on. And if you look at the Chinese economy, it's actually not that bad. You know, even though the scale down in terms of the GDP growth, you're still looking at about 4.5% sort of GDP growth. Now, if you look at the earnings, according to the MSCI China Index, it is, the China market deliver about, I would say, 14.2% for this year, and next year, another 12.7%. And these two double-digit return is pretty, to us, is a very exciting number, because the GDP growth is only growing about 4.5%, but the overall, the broader market for China is growing at almost twice the number. So there are a lot of opportunities for us to cherry pick the stocks in China and Taiwan. Yeah. So we strongly believe that China will remain a beneficiary of the Fed-driven liquidity. And if you look at, some of this money is actually coming from the US now, going into Asia. So hopefully they will pay attention to China or Taiwan or Greater China as a whole. Now, if you look at the global fund manager exposure to China, it's still underweighted. Yeah. So hopefully, things continue to run well for the funds. Okay, last but not least, I think we continue to focus on the sector we talked about, the 3 sector, namely the China AI supply chain, and number 2, the energy sector, as well as the pharmaceutical and the biotech in China. So with that, I conclude my presentation, and thank you for your support. The funds actually has grown, strength to strength to about 1.5 billion right now, and thanks to all your support. Thank you. I'm happy to take any questions.
I just want you to talk about rare earth and the relation of rare earth to the semicon industry. I know it's highly relevant to battery, but can you talk about rare earth and the relevance in AI and how China, which has a lot of rare earth, benefits from it compared to the US?
Well, I Actually can't comment too much on that because our stock selection or the way we run the portfolio is basically to a bottoms up approach. We look at the company. Of course, the development of event like this will affects the industry as a whole. But more importantly, I think the company fundamental in terms of the sustainability of their earnings are our key focus rather than commenting on a lot of the evolving events around the rare earth, around the political, geopolitical tension and some of these global risk sentiments. We rather focus on the stock and be able to look at the opportunity and take advantage of that. Yes, sir.
What is your thought on the GPU company in China? Are they investable now or still need to wait?
The GPU company.
Yeah.
That's a good question. There are some company we are looking at, but unfortunately, I think at this juncture, we stick to what we have in our investment universe. The investment process basically for us is quite simple. We do have discussions on the stock that we are interested in, and eventually those get approved, will be able to go into the investable list. And some of this company, they are still not at the profitable level. So we continue to monitor. And if they are able to pass the test, I don't think there's any issue for us to include some of these Chinese company into our investment universe. And if you look at the company we do invest in the portfolio, right? Most of them are already making money. Hardly any of those are actually, a good question just now on the SpaceX. Luckily, I don't have to answer that question because first of all, it's not under the Greater China. Number two, if you are investing in a company that are still losing money, I think there will be a lot of questions coming from our investment committee member. So we do focus on a lot of the company, have potential, but more importantly, they have to be profitable first.
Hello. Can you comment about the viability of the solid state batteries and how it's progressing now?
This is relating to the ESS, right? Of course, I think you have the lithium and you have the sodium coming to the picture, right? I think this company, CATL, has done quite a fair bit. And of course, I think in the EV sector right now, there are two schools of thoughts. One is actually trying to speed up the charging, whereby what you talk about is quite relevant. Probably the sodium will have to speed up a little bit. But there's another model whereby they actually go on rental basis. And when you buy the car, you don't buy the battery, then you just like Maxis, if you are a city jewel, you just basically buy a package which is within your mileage. And I think for China, these two will continue to move in parallel. We don't think they are in competition because at the end of the day, it's really what you prefer. So for that, I think the development is going to be very positive because you're going to see some of these supercharger coming to the market. I think a lot of the company, for example, like Tesla already working on it, BYD also working on it. Definitely there will be some breakthrough. But I just want to move you away from that. And beside this particular model, fast charging, there's also another model. I think the company is called what? Neo. I think these are the pure energy EV play in China, and we have seen significant growth in that particular model as well. So to answer your question, yes, there are some breakthrough. They will be coming to the market. We think that the China has a talent and technology to do it. And at the end of the day, when you buy the EV, you want to decide how you want to use it. You want to use a hybrid whereby you can charge it, and if you want to swap your battery, that is also an option.
What can you tell me about the China economy, because it is controlled? I'm a bit concerned about, say, going back into China when I've been hit before, when at the stroke of a pen, things had changed. So what gives you confidence that will not happen again?
China continue to move towards market reform, as you know. Even recently, for example, they opened up Hainan Islands for the logistic industry. I don't think they will go back to like in a very careless, I would say, in a way that surprise the market. And just like what you say, usually what they do is control, slow and control. And in terms of that, I think we are quite confident that the Chinese is actually opened the door even further. You can see some of this Belt and Road initiative, and a lot of countries are joining now. And there are a lot of countries initially opposed to that, right? Finally accept the fact that China is good to have it as a friend rather than an enemy. So in terms of that, I think we have no issue. In terms of the market reform, we have seen some of the development. For example, back to the pharmaceutical. You know, for a company to get to the market, it takes a long time, right? And China has been able to shorten that quite significantly. In the past, right, the approval process, it takes about, I would say, 18 months, a year and a half. They managed to actually cut it short to 3 months now. So I think with that in mind, right, China is very proactive in promoting some of the strategic asset that they have. I mean, strategic asset, you are looking at the energy, right? It's one of them. Biotechnology and pharmaceutical is another one. So, I mean, I have not seen any of their action so far that makes the investor kind of like taken aback and saying that what if you just shut the door, like we for example back in 1997 we just closed the door and the capital blocked at certain level. So far we have not seen that indication at all. If you always have that mindset, right, and you don't want to invest in China, you probably will miss out some good opportunity. More importantly, we think China is going to go through some structural growth in very specific industry. Of course, there are some sectors, for example, the consumer sector, the sentiment continue to be very, very sluggish, right? Because nobody wants to go out and spend. But at the same time, because of that, right, what happened is that I don't want to spend, but I rather put my money where in the equity market. That's what we are seeing right now. Okay, we are seeing a lot of people not willing to go and eat like your Hai Di Lao or whatever, the expensive meal, right? They rather put the saving into the equity market because if you look at the valuation, it is still very attractive compared to the US counterpart. Yeah, so that's one thing. And I just talked about the foreign fund manager. Usually they are still underweight, by the way. They're still underweight by 1 or 2%. Can you imagine, suddenly things look pretty rosy and all these global fund managers have to have at least neutral position for China. And this way we see the opportunity. So you look at the risk and the potential return. I think the potential return outweigh the risk at the moment. And so far, can you name me an example that you have lose confidence in China? Human rights issue? I don't know. You just need...
My confidence was when when Xi Jinping struck down some of the internet companies, right? Tencent and all that.
Okay.
So that was probably 3-4 years ago.
Mm.
Yeah. So I was hit by it.
Oh, so you stopped investing in China?
So I regretted it. Yeah. So now I'm thinking, okay, there's opportunity again. I was gung ho before, and then boom.
Yes, yeah.
That's why.
Don't ignore China, please. Thank you so much.